we're going to have higher inflation this year, above 2%.
If I were to travel right now, I would certainly be wearing a mask on an airplane.
I think vaccinations will rapidly overtake PCR tests.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Mega media merger. AT&T is poised to spin off its media assets and combine them with Discovery. That's a Bloomberg scoop. Open with caution, the UK takes another step out of lockdown amid concern over the India variant. Well, it's a different story in Taiwan, where curbs are being tightened to control the spread of the outbreak. And the U.S. has joined other world powers in calling for an end to violence in Israel, and the Gaza Strip will get the latest. Now let's get straight to our top market story. There is quite a lot going on. If you look at treasuries, they're actually pretty much stable, but the focus is, of course, on Bitcoin. Then overall, a lot more data this week as well. Let's get straight to our Danny Berger there to get us started for this Monday morning. Danny, weak data out of the U.S. on Friday. How's that playing out today?
Yeah, well, I mean, it is just so volatile when it comes to this data, Francine, because when we're looking at that one year-over-year comparison, it's difficult to get a really good grasp on what's happening with the economy, what's happening with inflation. And it's pretty remarkable to see U.S. 10-year yields basically where they were before that surprise CPI print. So what does that mean for the rest of the market? I mean, maybe it just really confirms this more dovish view from the Fed, but there is this sense that we have to wait, we have to get more data when we get sort of out of those base effects. In the meantime, though, we're still seeing commodities resuming their rally today. We have iron ore up nearly 2%, so that's helping a lot of the commodity stocks. But stocks in general struggling to find a narrative. You have more Asian countries like Taiwan, you were just mentioning, closing down. But at the same time, we have the UK opening up more today. We have New York opening up more this week. So at the moment, it's a weaker equity market. But the narrative is going to be a hard one to find today.
Yeah, it certainly is. I mean, the narrative for Bitcoin, Danny, then that's a whole other story, right? So there's speculation via a pretty, I would say, obscure tweet by Elon Musk saying that he could think of selling Bitcoin. But then now he's saying actually he hasn't.
Yeah, it's kind of a problem for Bitcoin that the narrative is just so clear for it that it can be moved around by Elon Musk. Yeah, so this price fall over here is when Musk says that Tesla isn't going to accept payments. We have some declines over here. That's from that tweet you were talking about, responding indeed to a tweet saying I wouldn't blame Tesla for selling its Bitcoin, and his latest tweet saying we haven't sold. So you get a little spike up in price here, but it's pretty remarkable to look at this chart and say, okay, a lot of the action we see throughout here is due to Elon Musk tweets. And it's not just Bitcoin, Francine. The entirety of the crypto space has been moving this way over the past few days. So here's that tweet saying Tesla has not sold any Bitcoin. Now, this is a problem if you are a big fan of cryptocurrencies because it's more difficult to sort of get that seriousness about it if Elon Musk's tweets right now are the main catalyst for it.
Danny, thank you so much. Our Danny Berger there with the very latest on, well, Bitcoin, treasuries, and everything in between. Now, sources tell us AT&T is planning to spin off its media business and merge it with Discovery. It's a surprise reversal for the company that spent $85 billion to acquire the assets less than 3 years ago. A deal may be announced as soon as this week. Now, combining Discovery's reality TV empire with CNN and HBO would create a formidable competitor to Netflix and Disney. Well, joining us now for the very latest is our deals reporter, Manuel Baigori. Manuel, why would this deal make sense, and how big would it be?
It would be huge, Francine. It would be huge. We're talking about a $50 billion potential deal, including debt, and it would make a lot of sense. I mean, we've seen telecom companies expanding massively over the last few decades, from their core telephone business into a more infrastructure business and also media. And they've been buying media assets left and right. It's a trend we saw in the U.S. We also experienced that in Europe. And now, years after massive investments in media, they've struggled to make those pay off. And they are facing increasing investor pressure to sell part or all of those assets. And that's why AT&T is now preparing to spin off its media empire and merged it with Discovery. Discovery has done really well over the last few years. They've been very acquisitive as well, and I think the combined entity would be really in good shape to compete with the likes of Netflix or Walt Disney, especially as we see the entertainment world changing rapidly in previous years.
Manuel, are we poised to see any more similar deals then?
It's very likely, Francine. It's very likely. It's a trend in the industry that seems unstoppable, and we are likely to see other major telecom providers across different geographies rethinking their strategy and looking at their portfolio of businesses and thinking what to do to create more value. So spinning off the media assets could potentially make sense for other big powerhouses as well in the telecom industry.
Thank you so much. Manuel Baigorri there with the very latest on this big deal in media that we'll, of course, keep on following very closely. Now, we are hearing from Hong Kong saying Singapore air travel bubble has been deferred. Again, this was an arrangement between the two cities saying that a bubble, and because of increasing cases, certainly in Singapore, for the moment, we understand that the bubble has been deferred. Now, Smart Conversations on Bloomberg Surveillance Early Edition. The UK begins the next phase of reopening, allowing international travel from green-listed countries. Later on in the program, we'll hear from the chief executive of Gatwick Airport. And as pubs and restaurants across Britain will be able to serve customers indoors, we'll also hear from the UK chief executive of Five Guys. If you want to take part in the conversation, just IB plus TV Go. This is Bloomberg.
My baseline scenario for inflation is that we're going to have higher inflation this year, above 2%. But then as some of those constraints on supply ease, I think we're going to see inflation go back down, and we'll have to, monitor that as we go forward. We do see the recovery continuing. It's just that we're going to have these month-to-month changes depending on which factors are more dominant. Is it the supply side or is it demand side? And I think the bottom line is it just, we're really at the beginning of this vaccinations, widely distributed part of the recovery.
Now, month-to-month volatility is something we should expect. That was Cleveland Fed President Loretta Mester speaking to Bloomberg exclusively about inflation and the economic recovery. She says that the Fed's policy is in the right place and that uneven data reinforces the need to be patient. Well, joining us now is Simon French, Panmure Gordon chief economist. Simon, thank you so much for joining us today. There was so much focus, of course, on each piece of data, either disappointing or actually better than expected. Why is it so volatile at the moment, and how difficult is it to actually forecast what kind of path we'll see for the U.S. economy?
Yeah, huge base effects going on in economic data around the world. And I think Loretta Mester captured it quite nicely there, which is month to month, we will see some big volatility. Consensus will be a long way from actuals. I think we should expect a bigger range of uncertainty around expectations. But then I think what I found fascinating overnight is we got some data out of China for April. And of course, China are further along the pandemic path than most of the rest of the world. And those base effects, if you'd taken them literally, would suggest the Chinese economy is slowing. But of course, the comps get harder as you go through the year. And I think for the inflation story, the fact that US inflation is likely to peak in the May print, it is the speed with which it comes down which will govern the Fed's communication message.
So where do you see, are the markets just ahead of themselves in worrying about inflation? I know I ask you every time, but does any of the data we've had so far change your view?
Nothing changes my view thus far, not because the data has come in as expected. That, as I said, consensus has been a long way away from where you would expect. We got a 4.2% CPI print out of the United States. That was 60 basis points above consensus. It is more that I'm afraid we're going to have to get through those April and May prints for US inflation, and we're going to have to get into the third quarter, the second half of the year, and start to see how much of that is sustained in terms of wage price spirals, and how much of actually it is the base effects leaving the system and starts to come back down, because the policy reaction function is different. So I answer your question by simply saying we do not have the data at this point. Investors are going to have to probably look to Jackson Hole at the end of August before the Fed are going to say anything more on how they process the start of the Q3 data, as whether their thesis, Loretta Mester and other FOMC members' thesis, is holding up.
I know, Simon, you also wrote extensively actually about possible M&A, and today we have this, possible big M&A. I know it's in the U.S., but is the economy kind of ripe for consolidation? Is it something that we've seen in the past, given where we are?
Yeah, I'm pleased you've mentioned that. Look, pinpointed, there have been 38 M&A deals in the UK market since the start of 2021. Now, this is a global story, but I would say it's particularly acute in the UK because of the valuation overpin. We know financial conditions are loose, which is a positive tailwind for M&A globally. But in the UK as well, on a cyclically adjusted PE, the UK market is at just 13 times. That compares to the US at about 34 times and the Eurozone at about 17 times. So private equity particularly is looking at listed instruments, listed equities in the UK and going, well, at that valuation, we don't think public markets are valuing it appropriately. And that is driving economic activity, north of £42 billion worth of M&A activity in the UK. And we expect that to continue well into the second half of the year. And globally, that's also a story which loose financial conditions support.
Are there specific industries, Simon, that you would be looking at, or do you think it's just the industries that haven't, consolidated thus far?
No, it's a really good question. So the analysis we did found that, again, UK-centric here, 9 of the 11 industrial groups have seen M&A activity. Energy and utilities at the moment not attracting any bids, but 9 of 11 does suggest this is pretty broad-based. Yes, there will be areas where particularly competition law is more permissive, and you're thinking about more consumer-facing sectors where perhaps consolidation delivers economies of scale where regulators are unlikely to stop that activity. But I do think, to answer your question directly, this is quite a broad-based pickup in M&A activity rather than narrow sector-specific.
Simon, thanks so much. Simon French there of Panmure Gordon stays with us, and we'll talk a little bit more, of course, about some of the forces at play in the markets and in business. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US is joining other world powers in calling for an end to the violence in Israel and the Gaza Strip. But Prime Minister Benjamin Netanyahu is signaling the fighting will continue, saying Israel will do whatever it takes for the security of its people. Pressure is rising on President Biden to condemn Israel. More than 190 people have now died in Gaza and 10 in Israel. Now, Microsoft conducted an investigation into co-founder Bill Gates' involvement with an employee almost 2 decades ago. It didn't reach a conclusion as Gates stepped down before the probe was completed. Dow Jones earlier reported he had to leave the board due to the inappropriate relationship, but a spokeswoman for Gates says it didn't play a part in his decision. And Bitcoin prices are steadying as Elon Musk says Tesla has not sold its Bitcoin. It follows speculation the company had or indeed planned to. Musk seemed to agree with a tweet that said Tesla should divest from the cryptocurrency. It was the latest statement from the billionaire to hit the digital token. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Smart Conversations on Bloomberg Surveillance Early Edition. The UK begins the next phase of reopening, allowing international travel from green-listed countries. Later on in the show, we'll hear from the chief executive of Gatwick Airport. And as pubs and restaurants across Britain will be able to serve customers indoors, we'll also hear from the UK chief executive of Five Guys. If you want to take part in the conversation, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, more lockdown restrictions are being lifted across much of the UK today. Bans on international travel and household mixing are being relaxed, but Prime Minister Boris Johnson is warning to be cautious. The government is concerned about the highly transmissible variant of the virus that originated in India. Now, the UK is also opening up vaccinations to the over 35s this week. Meanwhile, Taiwan is racing to contain its worst outbreak of the coronavirus while trying to avert a full lockdown that could also derail its largely successful anti-COVID measures. Now, the government urges businesses to let staff work from home or split locations, and authorities put the capital of Taipei into a soft lockdown. Taiwan is also closing its borders to non-residents for a month from May 19th. Now, in the last few minutes, also the government of Hong Kong has also said that the much-anticipated air travel bubble with Singapore, another so-called COVID-0 nation, has been deferred. Singapore returned to a lockdown last week after a local flare-up of cases. Let's get back to Simon French of Panmure Gordon. Simon, let's talk a bit about the UK and how you see that panning out. So we have a reopening that, eagerly awaited, but with worries about these new variants actually coming in and making things worse for the UK. If all goes okay, what will the UK economy look like in 12, 18, 24 months?
Well, as usual, Francine, your question is spot on. If all goes okay. So we've had some extraordinary growth forecasts coming out in recent weeks for 7, maybe even 8% growth. And those are largely conditioned on a couple of factors that have to go well. First of all, that there are no restrictions beyond the 21st of June. And we heard over the weekend that that is at least being negotiated at scientific levels and governmental levels in the UK, despite today's reopening of indoor hospitality. The other thing that has to go well is the consumer spending, the excess savings that the UK households accrued during the pandemic, about £180 billion. They're going to have to divest maybe 20% of that in order to hit those growth figures. So our own internal forecast is for 6.5%, which at the time I made it at the end of March was towards the top of the market. It's a bit more consensus now, but I'm happy where I am. Why? Because I think there are still some risks that there could be some restrictions in the second half of the year that the UK economy will have to navigate. So yes, great progress, great momentum, but a lot of the forecasts we've seen that are very high are priced for perfection, and that's always a dangerous place to be in capital markets.
It certainly is. Simon, I haven't asked you about Brexit actually for a while, probably for too long, because last week it was back at the surface with this tit for tat, between the fishing rights and actually equivalence for financial services. How much of an impact will that have on the way that this economy will actually perform?
Right. So materially, fishing is tiny, about 0.1% of GDP, not really going to move the dial in terms of the economic performance. Very salient political issue, but I think we can put that in the difficult to handle but not material for the macroeconomy. On financial services, there still remains an ongoing dialogue between the Europeans and the UK, but there is an ideological dispute here as to whether, without a harmonised rule book, you can grant equivalence between the EU and the UK. If the EU holds that line and the UK thinks it should be more mutual equivalence, if they can't agree on that, then I do think there is a chance the UK regulator takes a divergent path, and quite a significant divergent path, to try and have a more dynamic rule book to try and attract business to the City of London and wider UK financial services. That will be much more material for the UK economy, being about 8–9% of GDP.
So what's your take overall on taxes?
On tax, well, this is fascinating as well, because it links back to my first answer a couple of minutes ago, which is the UK growth performance. When the Treasury made its last update of the fiscal position in March of this year, it was assuming, or its independent forecast of the Office of Budget Responsibility assumed about 4.5% growth. If my forecast of 6.5%, or even some of the more bullish forecasts come in, then that will generate additional tax revenues and much less requirement for broad-based tax increases to reduce a fiscal deficit that this fiscal year, is projected to still be around 150 billion, having been 300 billion during the pandemic. So there's some really good news if those growth forecasts come in, because the tax increases that most people had started to pencil in for the November budget are unlikely to be required, and that gives the Chancellor Rishi Sunak some wriggle room.
Sam, I know we also mentioned right at the top China, and this was an important piece of data. Is there a concern that actually China surprises us on the bad side at some point, or are you pretty confident that actually what we've had so far is the way it will stay?
So I'm confident that at the moment the Chinese economy is on a decent path. It's actually ahead of most of the rest of the global economy in terms of its recovery. I don't think it would be the worst thing in the world, and it's not a usual thing for an economist to say, if the data disappoints for a couple of months, because, of course, the big fear is that exported inflation from China starts to put central banks and financial conditions around the world in a bit of a bind. So if we see the momentum come out for a couple of months, I don't think it's the worst thing for the economic narrative and the stability, because those overheating concerns will, of course, be pared back. There is a bit of an automatic stabilizer here.
Simon, thanks so much, as always. Simon French there, Panmure Gordon chief economist. And now, coming up, more smart conversations on Bloomberg Surveillance Early Edition. The UK begins the next phase of reopening. We'll be speaking to the chief executive of Gatwick Airport. This is Bloomberg. Mega media merger AT&T is poised to spin off its media assets and combine them with Discovery. That's a Bloomberg scoop. Open with caution, the UK takes another step out of lockdown amid concern over the India variant. Well, it's a different story in Taiwan, where curbs are being tightened to control the spread of the outbreak. And the US joins other world powers in calling for an end to violence in Israel and the Gaza Strip. We'll get the latest next. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So the U.S. joins other world powers in calling for an end to the violence in Israel and the Gaza Strip. But Prime Minister Benjamin Netanyahu is signaling the fighting will continue, saying Israel will do whatever it takes for the security of its people. Now, pressure is rising on President Biden to condemn Israel. Now, for more on all of this, we're joined by Bloomberg's Zainab Fattah. Zainab, thank you so much for joining us. First of all, is there any progress on the diplomatic efforts to end the violence?
Well, there doesn't seem to be a lot of progress on the diplomatic effort because the U.S. have been blocking a UN security statement calling for all sides to end the violence immediately. That was proposed by Tunisia, China, and Norway. And so far, most of the effort is focused on mediation efforts led by Qatar and Egypt. Media within Israel and the Arab world, they were reported that a proposal by the Egyptians was rejected by Israel. Meanwhile, currently the situation in Gaza is deteriorating. Yesterday was the bloodiest day in this conflict for Gazans. 42 people were killed, and that brings the total around 200 people. Nearly 60 of them are children who are buried under the rubble due to the airstrikes. In Israel, around 10 people died, including a 5-year-old boy. In Gaza, the situation is really grim. It's difficult. Hundreds of homes were damaged because of the airstrikes. The hospitals are overflowing with the injured, and there is no water and electricity. And aid cannot come from outside because of the continuing airstrikes.
I have to say the situation, the pictures are so heartbreaking, Zainab. Where is the situation likely to go from here?
Right now, there is a lot of pressure on President Biden, especially from the progressive wing of the Democratic Party. They feel that the fact that President Biden hasn't pushed Bibi Netanyahu to end the violence will be seen by Netanyahu as a carte blanche to allow him to continue with this offensive. And many within the Democratic Party are starting to see this, especially the progressive wing of the party, are starting to see this, the treatment of the Palestinians by the Israelis, the continuing occupation, as something of a human rights issue, of a social justice issue that resonates with them since the summer protest in the U.S. Over police shootings and so on. So we will likely see continuing pressure in the U.S. to push President Biden to take a firmer stand, to push the Prime Minister of Israel to stop this and resume the discussions and the peace process, which stalled for the past 4 years under President Trump.
Zainab, thank you so much. Zainab Fatah there from Bloomberg. I'm losing my voice, but let's quickly check on the market. Sometimes it happens. European stocks are slipping with U.S. futures, so this is what I'm looking at on your market board. A lot of the focus, of course, is not only of geopolitics with rising tensions in the Middle East, but a lot of the focus will be on things such as data, treasuries nudging higher along the dollar, most commodities opening the week on a steadier footing after last week's volatility. Now let's also get back to the latest on the virus and restrictions. A ban on international travel for tourism is lifted and indoor hospitality restarts for the first time since December across most of the UK. The government is urging people, though, to remain vigilant as concern grows over the virus variant from India. Let's get more now on the resumption of international travel with Bloomberg's Emma Chandra. She's at London's Gatwick Airport for us today. Emma, how much of a rush are airlines expecting this week? So we spoke actually to the chief executive.
We are seeing the resumption of international travel in a limited capacity. Of course, it all depends on that traffic light system. The green countries, of course, a limited number of countries that UK travellers are allowed to go to at the moment. Many of those countries not accepting international travellers, but one main tourist destination is, and that is Portugal. That's where the plane behind me is headed to in just a few minutes' time. Now, I spoke to the EasyJet CEO earlier, and he said demand is huge. I also spoke to the Gatwick CEO earlier, who said that they are expecting more countries to be added to that list over the course of the next few weeks and months, and they expect to see volumes and capacity increase from then. Take a listen.
This year we've been at exceptionally low volumes of activity. We've seen our volumes drop by over 99%, but very much our focus is on what happens next in the future. And as we look to the future, the big hope for ourselves is the vaccination program continues to roll out well, particularly across Europe and North America, and that will allow progressively for more countries to be added to the green list, and we'll start to see the resumption of international travel safely and at higher volumes. So that's what we're really looking forward to. And today, of course, marks the first day where UK citizens can now travel abroad and go about their business.
You mentioned the rest of Europe and North America there. Which countries is it really important for you to see added to that green list, and quickly?
80% of our passengers at Gatwick typically travel to and from Europe. So that's where the biggest part of our demand is. Behind me, we've got one of our EasyJet flights. They're our biggest airline, and obviously they only operate to and from Europe. So we really do want to see a priority across Europe. We believe that particularly the Spanish islands and the Greek islands, many of those at the next review should be added to the green list. And then as we go through the summer, we'd like to see some of the big holiday destinations, when it's safe to do so, added to the green list. So, for example, France, Italy, Greece and Spain. But also what's important to us is North America. About 10% of our traffic is across into the USA and Canada. And then there's the Caribbean, where we serve many of the different islands there too. So I think as we look forward, so long as the vaccination programs hold, as they appear to be doing so, and so long as the vaccination rollout continues to accelerate across Europe, we're looking forward to seeing a bigger business this summer.
The Gatwick CEO there, of course, Stuart Wingate, saying that that vaccination campaign key to reopening the aviation industry over the next few weeks and months. And they really needed, of course, the aviation industry hit extremely hard by the pandemic. IATA telling us a $126 billion hit last year, another $48 billion hit this year. They really need the summer season in order to generate those all-important revenues. Francine.
Emma, thank you so much. We can really hear the planes. I mean, it must be very, very, the sound must be actually nice to hear, even if really quite penetrating. Emma Chandra there at London's Gatwick Airport. Now, coming up, indoor dining resumes in England today. We speak to the Five Guys UK Chief Executive, John Eckbert. He's up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources tell us AT&T is planning to spin off its media business and merge it with Discovery. It is a surprise reversal for the company that spent $85 billion to acquire the assets less than 3 years ago. A deal may be announced as soon as this week. Combining Discovery's reality TV empire with CNN and HBO could create a formidable competitor to both Netflix and Disney. Now, EasyJet is confident that 2021 will still see a strong summer for travel. That is despite concerns in the UK and beyond over fostering spreading variants of the coronavirus. The airline CEO says a rollout of vaccines should mean most of Europe is open to visitors.
The demand is definitely there. There's a huge pent-up demand here for people to come and see family members that haven't been able to be meeting across this pandemic, as well as people who want to go on holiday as well. So the demand is definitely there. Now it's down to unwinding the restrictions to restart travel in a safe way.
And finally, Crown Resorts has rejected a $6.5 billion takeover bid from Blackstone, saying it was too low. It hands the advantage to rival suitor Star Entertainment. Crown says there was too much uncertainty tied to the Blackstone bid, including over timing and approval. The Australian casino operator says it is yet to form a view on Star's offer. Microsoft conducted an investigation into co-founder Bill Gates' involvement with an employee almost 2 decades ago. It didn't reach a conclusion as Gates stepped down before the probe was actually completed. Dow Jones earlier reported he had to leave the board due to the inappropriate relationship. But a spokeswoman for Gates says it didn't play a part in his decision. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, lockdown restrictions are easing in England today. Restaurants and bars can now serve indoors again for the first time in 5 months. Many of them are struggling to find enough staff after Brexit. Low pay and long hours pushed many hospitality workers into new careers. Meanwhile, the UK government is concerned about the transmissible nature of the Indian variant. Well, the Prime Minister Boris Johnson said the next step out of lockdown must be taken with a heavy dose of caution. Now, fast food chain Five Guys is opening its UK restaurants for indoor dining today. And joining us to discuss all of this is John Eckbert. He's the Five Guys UK Chief Executive. John, as always, thank you so much for coming on. You must be very excited that you're serving customers indoors. First of all, have you taken a lot of precautions to make sure that people feel safe?
Of course. I mean, the good news, Francine, is that we've been open and trading through our 117 stores pretty much throughout the pandemic. So we're confident of the safety of the inside of our restaurants because our crews have been operating in them for throughout. So we're very excited to welcome guests back into dining rooms for the first time. Of course, we've been open for delivery and for takeaway, so we've been having guests come in and order. But for the first time, we'll be able to truly take care of guests with the hospitality that we're used to offering. As famous as we are for burgers and fries, we also want to be famous for taking great care of customers. And of course, that's so much easier to do when you can actually dine in the restaurants, in the dining rooms for our stores.
John, overall, in the last 5 months, have you been able actually, or how much of your sales have you been able to do through delivery, either takeout, pickup, or through companies such as Deliveroo and Just Eat?
Yeah, of course, we've been quite busy with delivering food, but actually one of our busiest segments has been curbside, where you can actually order on the app and then kind of like reverse Uber it. We can track your arrival and prepare the food just for when you arrive, so it's hot and fresh for you. So we've been using technology to come up with new ways to take care of customers as they order takeaway when they haven't been able to use the dining rooms. Of course, for the past month, we've been able to use terraces, which has been a huge help to be able to serve customers outside, and now to be fully back open and trading is really exciting. And of course, we want to make sure that we can continue to do that throughout the summer. So we've put a great deal of care into how our dining rooms are organized to make sure that our customers have a very safe, enjoyable experience and that they can have that same energy and passion and customer service experience whenever they come into a Five Guys.
How difficult, John, is it to actually, try and predict the kind of footfall that you'll see in the coming weeks? I mean, it's also, the weather has not been great in most parts of England, certainly. But is it people that will not order curbside and will come in stores, or how different is that customer?
Yeah, so Francine, we've been ready for a big jump in customers coming in. And we think there's going to be kind of a euphoric response. I don't know about you, Francine, but getting outside and going to a restaurant, and it all feels really exciting. As strange as it was to go into lockdown and to not be able to do that, it now feels kind of strange to be able to go back and do that, but it's so exciting. And I know so many people are excited to come into a Five Guys and have our burger and fries, burgers fresh off the grill. So we're ready for a lot of business, and we think there'll be a lot of people coming in. And of course, for Five Guys, you don't have to book. So you just rock up and come in, and we're ready to serve you. And no need to worry about whether we have a table for you.
I mean, I was just excited to eat something that I wasn't cooking myself after so many months. John, how much, do you see the footfall changing? So are you seeing much more, some of the Five Guys restaurants when we're, away from workplaces do better than maybe in more congregated areas where people went to the office? And how are you expecting that to change?
Yeah, there's been a huge change in the mix of where our business comes from. Obviously, our central London stores are massively down, where you would have high tourist footfall, high office worker footfall, and some very surprising locations. We just opened a store in Stevenage and the West Midlands Designer Outlet. They're creating record sales because, frankly, very few other restaurants are open. I think only about a third of all the restaurants opened when you could open terraces because they didn't have the capability of serving customers on terraces. So we've been fortunate enough that where we have been able to open, we've seen actually really robust sales where customers want to come out and and experience something, again, like you just said, where you don't have to cook it yourself.
John, I think you were one of the first ones, actually, that I spoke to at the start of lockdown just over a year ago, actually, in 2020. How do you see Five Guys changing in the UK? Are you going to open more stores or more restaurants and close some of them? And how do you see that shifting, even for restaurants that haven't been doing so well? Is this a make or break moment?
Yeah, so obviously 2020 was a black swan event, the most challenging for any of our lifetimes. The good news for us is that our format was flexible enough that we could survive and thrive even in that environment. We have now doubled the new store openings planned for this year. We've kind of had about 12, 13 planned. We should do 25 or more this year. We see a lot of opportunity in some pretty prime real estate coming available, and we're really excited to take advantage of that. So we think it's a real opportunity for those who are strong enough to expand, like Five Guys is fortunate enough to be. So we think there's a lot of opportunity right now in the market.
John, thank you so much. John Eckbert there, the Five Guys UK Chief Executive Officer, joining us on a pretty important day for a lot of restaurateurs over here in the UK. Now, let's also take a look at AT&T and Discovery shares in pre-market after that Bloomberg scoop about the media businesses merging. You can see AT&T gaining some 1.4%, Discovery actually gaining some 13%. It's a big one, and I have to say some of the valuations around this were pretty impressive. I think it would create something that could actually go head-to-head with some of the big players out there, and certainly it would be valued, the numbers that I've seen was around 150, if not more. Again, AT&T preparing to spin off its media business and merge it with Discovery. We understand this is a Bloomberg scoop and it would be a tax-friendly deal. We'll have plenty more on that. It could be announced as soon as today or even this week. And also, don't miss more of our coverage on the UK reopening. In the next hour, we speak to the Mayor of London, Sadiq Khan. Stay tuned for that. This is Bloomberg.
In most other parts of the world, factory visits like this are routine. Not here. We're in Xinjiang, a region of China where the government has been accused of numerous human rights abuses against the Muslim Uyghur population, including forced labor in its crucial solar industry. China denies the claims. Now, one of the country's biggest solar companies, Daqo New Energy, is betting on greater transparency to neuter the criticism. Daqo itself has not been directly linked to Xinjiang's labor transfer program.
This is the first solar factory in Xinjiang to open its doors to foreign media since the allegations of forced labor in the sector surfaced. And behind me, you can see the polysilicon, the material that will ultimately end up in solar panels all over the world.
Business has never been better at Daqo New Energy. Demand for the US-listed company's polysilicon products is so strong that its factories are running at full capacity and profit margins are above 50%. But the stock price has lagged. With its massive plant in a region now synonymous with abuse allegations, the company risks being tainted by association. That's left it in the geopolitical hot seat and its CFO trying to reassure anxious investors.
Most of the impact is to investor perception, which has an impact on our share price. It's discounted because of this.
Daqo is lining up auditors to vet its operations. Executives hope an independent assessment will help insulate the firm from US sanctions on the Xinjiang solar industry, an outcome they now see as likely.
We have not ever participated in any of the labor transfer programs.
Would you ever, if the government was to ask you and was to lean on you and say, you need to be part of this program?
We're a foreign invested enterprise, so we're not obligated as a company to follow any of the company government orders unless we want to. And also, I would say morally and principally, we're a company that we have very high integrity standards. And so we would actually, if the government did ask us, we would not participate in these type of programs.
Selecting auditors is just a first step. Getting them into China and securing access to key facilities could be challenging, given the closed nature of this highly surveyed region. What's clear, though, is this issue isn't going away anytime soon. In Xinjiang, Tom McKenzie, Bloomberg News.
Well, that was Bloomberg's China correspondent Tom McKenzie in one of Xinjiang's booming solar factories. Now let's get the latest also on one of our top stories, and the U.S. is joining other world powers in calling for an end in the violence in Israel and the Gaza Strip. But the Prime Minister, Benjamin Netanyahu, is signaling the fighting will continue, saying Israel will do whatever it takes for the security of its people. Now, pressure is rising on President Biden to condemn Israel. More than 190 people have died in Gaza and 10 in Israel. And in one of our top market stories, Bitcoin steadies after Elon Musk actually clarifies that Tesla has not sold from its cryptocurrency holdings. So we'll have plenty more on that. The main news, of course, is not only on Bitcoin, but the fact that just with a tweet, just like that, it's very clear that it can move Bitcoin and sometimes with it a lot of the other cryptocurrencies. The other story, of course, is the next key part of the UK's reopening from COVID-19 restrictions take place today, with indoor dining and drinking to be allowed, even if there's a shortage of chefs. Now, we were speaking to Five Guys here in the UK. Now, they've been open throughout, although for a delivery or a curb pickup, so that would make it easier if you're, easier certainly than if you've been a restaurant that's been closed for the last 5 months. This is a picture for Treasuries 16165. We are expecting quite a lot of economic data out of the U.S. this week as well. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz will be in New York. We'll have full market checks and, of course, a big story, media M&A. This is Bloomberg.
If I were to travel right now, I would certainly be wearing a mask on an airplane.
So long as the vaccination rates are happening across Europe and so long as the infection rates are falling, we very much expect to see more countries added to the green lists.
We think we're looking at a very strong July, August, September. We think the booking trend over the last 6 weeks clearly supports that.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning from London, Berlin, and New York. Our top stories today. Reversal of fortune. AT&T is set to spin off its media business and merge it with Discovery. Less than 3 years ago, it spent $85 billion to acquire the Warner Media assets. Bitcoin bounces, the world's largest cryptocurrency falls and then rises in the wake of a couple of tweets from Elon Musk. And lifting the lockdown, England relaxes more coronavirus restrictions, but there's still concern about a new strain of the virus. We'll talk with the London Mayor, Sadiq Khan. So there's quite a lot going on today. That M&A deal, of course, Bitcoin. Actually, Kailey, right on the money with a tweet last Friday saying what moves more the markets. Is it eco data or an Elon Musk tweet? And then, boom, this is what happened over the weekend.
Yeah, I think 61% of people in that poll I put on Twitter said Elon Musk has greater power to move the markets, Francine. So there you go. And obviously, we saw that on full display over the last 24 hours. Now, also over the last 24 hours, we did get, of course, data out of China overnight in the Asian session. It shows the recovery is still a bit split in that retail sales did disappoint, so consumer spending is still lagging. Nonetheless, Chinese stocks did outperform in the Asian session, up about 1.5%. The big laggard once again was Taiwanese equities. They were down about 3%, continuing their decline as the COVID situation worsens and the country continues to reimpose restrictions. In foreign exchange, the yen is stronger against the dollar by about 0.1% at 109.21. And then I wanted to point out iron futures as well, back above $200 in Singapore, up about 2.5%. Even as China tries to rein that in a bit, it isn't necessarily working. As for what the picture looks like in Europe, it is a mostly risk-off tone. The Stoxx 600 is off of session lows, but still fractionally lower. And in the UK, the FTSE 100 is down by about 0.3%. Speaking of the UK, today, of course, is the day that the country continues to reopen. International travel coming back. Francine can mix with another household indoors if she wants to. But and with that, the British pound is stronger fractionally against the dollar, sitting at 141.08. In the bond market, no action on the German 10-year bond yield. We're sitting just around negative 13 basis points. As for what the picture looks like here in the U.S., we did see that strong rally to close out the week on Friday. Not a lot of follow through this morning. Futures fractionally lower on the S&P 500, down about 7 points. In the Treasury market, we're up just a basis point on the 10-year yield to 1.61%. And I wanted to note gold futures continuing to get a bid. We're up about 0.8% right now. Interesting action happening in that part of the commodity complex. And then, of course, Bitcoin, we have to talk about it. Elon Musk wielding his power. First, it was down around 42,000 after he hinted that maybe Tesla had sold its Bitcoin holdings. He then clarified that no, it has not. So we've seen Bitcoin come off the lows. Still, though, we're down about 8% from Friday's price, right around $45,000, Matt.
Yeah, I think, it has to be pointed out when saying that Elon Musk can move markets. We're only talking about a couple of markets here. You're just talking about crypto, really, right? And Tesla stock. The oil market, you say?
I said it's still a market, Matt.
True. No, you're right, 100%. But I mean, it's to be expected, right? If you own $1.5 billion worth of Bitcoin, people are going to pay attention to your tweets. You're a giant whale. Yes?
You are a whale, actually. Don't rain on our parade. It was a great poll. Right. What moves the market more? Matt Miller.
Well, definitely. He can move a market, certainly a Bitcoin market and Tesla shares as well. Take a look at what's going on in the week ahead. As we've told you, Italy enters its next phase of reopening today. I will point out that Germany is going to be reopening this week as well, and it's a bigger economy. But we do pay attention to the UK as there are a lot of banks centered there. Tomorrow we're going to get earnings from Walmart, Macy's, and Home Depot. So big day for earnings and the U.S. consumer. The Fed releases minutes from its April meeting on Wednesday, and President Biden hosts South Korean President Moon Jae-in at the White House on Friday. Actually, Francine, my favorite restaurant is going to start serving here in Berlin on Friday. It's called A Never-Ending Love Story on Bleibtreustrasse, and I'm going to try and go there and get some pancakes before this program.
Right, and this is indoor seating, right? It's amazing. So I love when there's ever a reopening, you kind of speak to your circle. So here in the UK, we're just reopening indoors. And, what is fascinating for me is actually it's about risk analysis and how different people still don't feel comfortable in going indoors. But in Germany at the moment, it's only outdoors. Or is it?
Yes. Although I would feel comfortable either way. I'm not worried.
Wants his pancakes.
Comfortable in all locations.
Yeah.
Now, Bloomberg's learned that AT&T is planning to spin off its media business and merge it with Discovery less than 3 years after acquiring the assets. Well, joining us for more is Bloomberg's deals reporter Manuel Baigorri. Manuel, first of all, does this deal make sense? I mean, it's a huge deal.
Yes, definitely, Francine. It's a big deal, and it does make a lot of sense. I mean, we've seen in the past telecom companies diversifying and building up their businesses, and media was one that made a lot of sense at the time. So they've invested in billions of dollars getting into media. Now we are seeing quite the opposite, and they are asked by investors to refocus on their strategy. So they are considering selling some of those media investments, and this one in particular, a tie-up with Discovery could really create a powerhouse in the media and entertainment world, and face a more challenging position with other competitors like Netflix or Walt Disney. So I think it does make a lot of sense, especially in an environment in which we see the media world and entertainment, broadly speaking, changing rapidly.
All right, Manuel, we're going to talk a lot more about this deal throughout the program, but thanks very much for joining us. The primer, Manuel Baigorri, talking about the potential deal, the turnaround at AT&T. Let's get to Bitcoin now. The price has steadied after Elon Musk said Tesla hasn't sold from its $1.5 billion worth of holdings of the token. There had been some question after an earlier tweet. Let's get over to Bloomberg's Danny Berger for the full kind of gossipy story. Danny?
Yeah, it is kind of gossipy. I mean, I think kind of the remarkable thing about Elon Musk turning on Bitcoin, if you will, is if you looked at his tweets over the weekend, okay, sure, he says they haven't sold their holdings, Tesla hasn't sold their holdings, but either way, he's almost taken this sort of troll mentality that sometimes a lot of Bitcoin fans have, and Elon Musk certainly sort of jokes around on Twitter and sort of aiming that towards the fans of Bitcoin. I mean, responding to a crude tweet calling Bitcoin fans sensitive, more or less. So, I mean, look, Bitcoin price is up higher, but it is pretty remarkable to see just this downward draft it's gone through since Tesla said that it's no longer going to accept payments in Bitcoin. So you have one of the biggest cheerleaders of the cryptocurrency now changing his attitude. But kind of one of the notable things I also think to keep in mind when you look at what it's done over recent days is it's not just Bitcoin that's fallen, it's really the entirety of the crypto space, maybe save for Dogecoin, but we've seen the Bloomberg crypto index. Most of the stuff in here has been falling, even though Elon Musk was specifically talking about Bitcoin. So, you know, maybe it is just one market cryptocurrency, but it's not just one cryptocurrency. It is other ones that Elon Musk seems to be affecting at this point.
Danny, thanks so much. Our Danny Berger there with the latest look at cryptocurrencies. Now, here in the UK, the next phase of reopening starts today. Restrictions are being relaxed on areas including entertainment, indoor dining, and some international travel. Now, the chief executive of Gatwick, Stuart Wingate, has been speaking to Bloomberg's Emma Chandra this morning, and he says they're expecting more countries will be added to the quarantine-free travel list.
As we go forward, we want to see this risk-based approach, and so long as the vaccination rates are happening across Europe and so long as the infection rates are falling, we very much expect to see more countries added to the green lists as those lists are reviewed every 3 weeks.
Now joining us is Emma Chandra from Gatwick Airport. Emma, you wrote to me quite funny, you know, the sweet smell of jet fuel is something that we haven't smelt for quite some time. Is it busy?
Certainly a very strong smell of jet fuel here on the tarmac at Gatwick Airport. It has been busier today, but we're still looking at an airport that it is at a fraction of its normal capacity because, of course, that resumption of international travel is still limited. Just 12 countries on the UK green list, meaning travellers can travel but return without having to quarantine. A number of those countries not allowing international travellers, and in fact just one main European hub on that list, that's Portugal. And of course, that even still not the most popular country for UK tourists. Nevertheless, we have seen capacity added in that way in terms of more seats and more flights. But this is what airline CEOs are now having to deal with in this current environment. Of course, we're seeing even in countries like the UK, where they've had a strong vaccination campaign, an incredibly cautious approach to allowing the resumption of international travel. And yet across the world, of course, we are seeing more restrictions being imposed. news just this morning. Hong Kong and Singapore saying they're going to defer the date at which they will have their travel bubble. And even in those big aviation markets, the likes of Brazil and, of course, India, we're seeing further restrictions as they battle second and third waves of the disease. Nevertheless, the CEOs here, both of Gatwick and EasyJet, who I spoke to earlier, sounding very optimistic about the summer season, hoping that there will be more countries added to that green list, and saying they are pressuring the UK government to allow that. Of course, the summer season incredibly important in terms of revenue generation for an industry that has been hit incredibly hard by this pandemic.
That's absolutely right. And of course, we are seeing that huge difference between what's happening in the West and elsewhere in the world. Bloomberg's Emma Chandra, thank you so much. Enjoy your jet fuel for the time being. I do want to check on some stocks moving in pre-market trading at the moment. Viacom CBS, one of the big outperformers in early hours. It's higher by, or AMC Entertainment also is higher by about 3.5%. This is an interesting story. If these gains hold, it will be the 7th up day in a row for this stock. Those meme traders really trying to bid it up. We're up about 3.6% this morning after a rally of around 37% last week. Also, we were just hearing from Danny Berger about some of the volatility in the crypto space. We have crypto stocks moving as well as Viacom CBS. It's higher by the better part of 4%. A regulatory filing last week from George Soros Investment Fund shows the firm actually started buying those shares when those massive block trades from Archegos Capital Management were happening. So that has the stock higher. But as I said, crypto stocks under some immense pressure today. Thank you very much to Elon Musk. Coinbase, the biggest crypto exchange in the U.S., is down about 2.5% in early hours, Francine.
Yeah, we'll keep a very close eye on that. Now, coming up, we'll have more on the AT&T Discovery deal with Neil Campling. He's Mirabaud Head of Technology Research. And a little bit later, as England enters its next phase of reopening, we'll be speaking to London Mayor Sadiq Khan. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, it's a surprise reversal for AT&T. Bloomberg has learned that the company is planning to spin off its media businesses and merge them with Discovery less than 3 years after spending $85 billion to acquire these assets. A deal may be announced as soon as this week. And joining us to discuss is Neil Campling, head of TMT Research at Mirabaud Securities. Neil, this is, to me, it's pretty shocking. Maybe other people in the market were expecting this kind of thing. There has been kind of consolidation talked about in this industry, but AT&T, Randall Stephenson spent over a decade buying this stuff, and they have some of the most valuable gems in the entire industry. Why sell?
Yeah, you make a great point that they spent $85 billion themselves on buying the Warner assets as part of really what we've seen in M&A. $700 billion has been spent in M&A across media in the U.S. alone since 2014. But I think what we're seeing here is a problem for AT&T because they have made a focus on cost transformation, that their number one focus, which means they kind of have to shrink the focus onto certain areas. And really, if you think of what we've had, we've got unprecedented change in the media world driven by technology itself. And so it's forced companies to consider transactions which perhaps have got to unwind some of those combinations of the past. Because, for one, if you think of what we've seen from one of the other majors, Disney basically made an aggressive pivot by choosing to go after the DTC, the direct-to-consumer market. And we've seen that success with Disney+. And for HBO Max and for other assets to do the same thing, they're going to have to spend significantly, which goes against AT&T's current plans.
So AT&T bought Time Warner in 2018, or it was completed in 2018. Was that a mistake, or is this just a way of actually creating a formidable competitor?
I think, to be honest, it's turned out to be a mistake, because the idea really of having so many threats under one roof hasn't worked. And we've seen that already, because, of course, they've had to sell out of the TV subscription business for a significant loss. So with DirecTV. So, these plans for AT&T really haven't worked. And I think if you look at one company that has successfully built scale and a differentiated offering, then it's Comcast. And that's interesting in itself, because I would suggest that many in the industry had been probably speculating for the last year or two that if there was going to be a deal, it could well be with Time Warner and Comcast coming together.
Neil, let's talk about the price tag. Reportedly $50 billion, including debt, is what is being looked at. Is that fair value to you?
It sounds like it could be. I mean, to be honest, if I look at the assets under Time Warner, if you're going to include the gaming business, which again was a speculation that AT&T could be looking to sell that last year, I think the gaming business is a great asset that will come within that. So $50 billion for all of the assets of Warner that you get with that, with the global reach that you have from CNN, HBO Max that has obviously great market share gains in the last year as well, then $50 billion doesn't sound like a stretch. Then on the other hand, I think you have other assets in the media industry that could be even more attractive for other players. So it depends on how the deal shakes out, and don't forget as well that whatever structure is put in place, then Discovery also has a master in a shareholder, one John Malone, in terms of the way that deal structure is often put together for the benefit of shareholders.
Neil, thank you so much. Neil Campling, the head of TMT Research at Mirabaud Securities, and of course that great Bloomberg scoop by our very own Ed Hammond. Now, coming up, the U.S. joining others in calling for an end to violence in Israel and the Gaza Strip. We'll discuss the very latest next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, let's get the first word news now, and more revelations coming out in the wake of Bill Gates' impending divorce. Microsoft conducted an investigation into Gates' involvement with an employee almost 2 decades ago, after being told in 2019 that he tried to start a romantic relationship with her. The company investigated but didn't reach a conclusion because Gates stepped down from the board. A Gates spokeswoman says he did not leave because of an affair. Israel's Prime Minister Benjamin Netanyahu signaled he's not ready to let up on attacks against Hamas positions in Gaza. More than 200 people have been killed, the vast majority in Gaza. Netanyahu says he'll do whatever it takes to restore order after constant rocket attacks from Gaza has led to retaliation from Israeli warplanes. Western and Middle Eastern leaders are trying to solve the crisis, but have little to show for their efforts. Let's get more on this story now with Bloomberg International Government Editor Roslyn Matheson. Roz, how much longer can this go on before the Biden administration is forced to take a harder line?
Well, certainly, if anything, what we've seen across the weekend is that Benjamin Netanyahu does not seem to be slowing down. If anything, picking up, intensifying the attacks, particularly on the Hamas leadership, trying to, what he said, degrade Hamas's ability to keep hitting Israel, and that he doesn't see an immediate end in sight. That's even as the U.S. does press both sides to de-escalate. And you can see that Antony Blinken, the Secretary of State, has been doing the rounds with other countries also, and dropping some of the prior language, which was really defending Israel's actions so far. That said, he's under pressure, Joe Biden, within his own party to take a stronger line against Israel. Some of the Democrats on the left in particular are pressing him to do so, saying that he's really in some measure potentially giving Netanyahu a green light to continue by not criticising the airstrikes that have been pretty relentless on the Gaza Strip. So he needs to knuckle down and do that, is what they're saying. At the same time, he's under pressure from Republicans to also sort of protect and defend Israel in all of this. So the tone of the language from the US is the key thing to watch, and how behind the scenes they can convince both sides to agree to some sort of ceasefire.
Ross, thank you so much. Bloomberg's Roslyn Matheson there. And of course, we'll see whether some of the progress on the diplomatic efforts will lead to a ceasefire or not in the coming days. Coming up next, we look at England's next stage of reopening with the London Mayor, Sadiq Khan. This is Bloomberg. Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there's, of course, quite a lot going on. There's a buzz in the UK, or certainly here in London, Matt, with a lot of restaurants reopening. All restaurants from today are allowed to open indoors, but it was interesting because of the variant coming from India. At the same time, the Prime Minister is telling people to be cautious. So everything's reopening, including indoor cinemas, but he says just be cautious and be on the lookout if you have any symptoms.
I would throw caution to the wind and go to the Anglesey Arms for pictures of Pimm's. Then I would go to the Hollywood Arms for some snake bites, back to the Draycott Arms for some more beers, and then down to the Builders Arms to finish up. So I feel
Maybe
like as soon as I can get back, I will visit all the important pubs of Chelsea.
Yeah, maybe not at 10:30 in the morning, or Kailey and I will pick you up off the floor.
Yeah, that would be a little bit early.
Team surveillance.
Yeah, it would be a little bit early. There you go. There you go. We need an adult to be in charge. Kailey, what are you looking at in the markets?
Well, it's not a super exciting day, if I'm being honest, Francine. Equities are lower on both sides of the Atlantic, but the moves at this point are pretty fractional. We're only down about 0.1% on the stock 600 in Europe. Here in the U.S., a little bit more of a leg lower for futures. We're down about 7 points on S&P E-minis. And in the bond market, not a lot of fireworks either. We're up just a basis point on the 10-year Treasury yield to 1.61, just shy of 1.62%. Where the real action is in the cryptocurrency space. I know, shocker, Elon Musk once again roiling the Bitcoin market with his tweets. First, there was speculation that Tesla had sold its holdings. He then clarified it had not. But even still, with crypto being down on the day, Bitcoin being down on the day, a number of cryptocurrencies tied stocks in pre-market trading are also lower. Riot Blockchain down about 8.5%, Marathon Digital by 9%. And of course, it is a Monday, and we do have some potential merger action. Bloomberg reporting that AT&T is looking to spin off and merge its media assets with Discovery. And on that report, Discovery is higher by 12% in early hours. AT&T, for its part, up about 2%, Francine.
Yeah, this is the big story, of course, in terms of M&A. Now, today, as we're just talking about, marks the next stage of reopening in much of the UK. The Prime Minister, though, Boris Johnson, urging caution amid fears that the highly transmissible virus strain that originated in India could lead to a major surge in cases. Our Anna Edwards is in central London with the Mayor, Sadiq Khan, the newly re-elected Mayor. And Anna, is it buzzing out there?
It's buzzing with delivery trucks and all the comings and goings of London this early on. Good morning to you, Francine and Matt and Kailey. Good to be with you. I'm pleased to say I'm joined by the Mayor of London, Sadiq Khan, who's here promoting our newfound, newly realised ability to eat out inside. Mayor Khan, very good to speak to you. Thanks for joining us. You're launching this London Eats campaign then. What are your hopes and aspirations for how busy London can get then with people going out to eat?
Well, I'm doing my bit. I've had 2 breakfasts already indoors, and it's great to be back eating inside restaurants. Look, this campaign we've got is the biggest domestic tourism campaign London's ever seen. And we're encouraging Londoners to come back to the West End, but also those from across the country to come to London. We think we've got the coolest restaurants, the hottest nightlife. We've got the world's best cultural attractions, hospitality venues, and they've had a really tough 14 months. So this will not only lead to all of us having a great time, but it'll protect jobs too.
So you want to encourage people to come back. Are you at all concerned, though, that this could be too soon? Of course, the weekend dominated by headlines around the so-called Indian variant. Are you concerned that this might all be a little too early?
Well, I think it is possible to act in a COVID-safe, COVID-sensible way, but also help our pubs, bars, restaurants, cultural attractions, hospitality venues. We've got the world's best food and drink. We've got the world's best theatre, live music, but it's also important to be cautious because this virus is still with us. The good news is almost 6 million Londoners have now received the vaccine. Almost 2 million received both doses. We are keeping an eye on this Indian variant. So a message to Londoners is make sure you test regularly. The lateral flow used twice a week at least. And if you're worried, have a PCR test. Every single PCR test where somebody tests positive, we're checking to see whether you've got the Indian variant.
Yeah, how much of the Indian variant is going around London at this point? How widespread is it in the capital?
So I spoke to my health advisor yesterday and today, and also to Public Health England and the NHS late last week. We think we've got about 400 positive cases in London. So we're thoroughly contact tracing those who have tested positive to see who they've been in contact with. About 100 have had a travel link to India. It's really important that we aren't complacent. It's really important we're cautious. At the same time, we're encouraging people to enjoy the sights and sounds of our city safely.
Yeah, and things getting busier here, and it's really tempting to get very excited about all of that. But with most people under the age of 35 in this city unvaccinated, are you at all concerned that as those younger age groups come out to enjoy all that London has to offer, that we end up creating a worse situation with either the Indian variant or a spike up in other variants?
It's possible to be excited, enthusiastic and cautious. Look, since the peak in winter, we've had a reduction of cases around 98%. Hospital admissions down by 96%. The game changer is the vaccine, but also us finally getting a grip of test trace. It's really important all Londoners test regularly, but it's also really important we support London's economy. You know, 1 out of 5 jobs are in hospitality and culture, and it's possible to have a great time, to protect jobs, and to make sure the virus doesn't spread.
Do you want to see more surge testing, more surge vaccinations perhaps taking place in parts of London? Where are those parts of London where we have more prevalence of the Indian variant?
So we're working with the government to encourage the government to increase the amount of vaccine rollouts in those parts of London where we're a bit concerned because of positive cases of the Indian variant. And that includes giving the vaccine to younger Londoners in some parts of London rather than others. So the message to all Londoners is test regularly. There are 5 boroughs where we've seen a bit of an increase in the Indian variant. They're Bromley, Croydon, Ealing, Hillingdon and Hackney. But all of us should be cautious, and all of us should also try and support London's economy.
And are you getting a sense that the central government is keen to do that? Because they seem to be hesitant to break away from the plan for distributing the vaccine as set out by the JCVI, the UK authority on that front.
Look, the NHS has done a brilliant job in rolling out the vaccine. The government should be commended in the fact they've managed to procure so many vaccines and so many different types. What I'm saying to the government is I can understand the advice you've received from the JCVI. It should be done by age. But my advice to the government is, based on the evidence we have, is it's good for us to be nimble. So if there are pockets of the country or pockets of London where we're seeing a higher number of people with the positive test with the Indian variant, in those pockets we should see an increased rollout of the vaccine, including younger Londoners who otherwise wouldn't get it yet.
Any sign the government is listening, though?
Well, I think we've seen in Bolton the NHS being flexible when it comes to the rollout. I'm hoping the government is flexible in London as well.
Are you considering incentives to encourage Londoners to vaccinate? I know you've been doing international research on incentives used elsewhere, but what would be appropriate in these communities that you're talking about where it's been difficult to get the vaccination levels higher?
Well, look, we've been speaking to friends in Israel who've told us about a gin for a jab, or a shot for a shot, or a pizza for a visor. We're not quite going down there yet. What we're trying to do is educate and explain to Londoners why the vaccine is a game changer. The early evidence we have, both in this country and in India, is that those who have the vaccine less likely to catch the Indian variant and less likely to spread it, but also if you catch it, the consequences aren't as serious. So the key thing is to understand why this vaccine is a game changer, a lifesaver, and I'm encouraging all Londoners, when you offer the vaccine, take it at the same time as trying to persuade the government to give it to more younger Londoners where we're concerned.
You've talked about the message you're giving to central government, Mayor Khan, but your relationship with the central government, with Number 10, has been at times a little testy. How would you assess that relationship? Are you getting what you need at this point?
Look, now we've got the election out of the way, and I've won a huge mandate. I'm hoping the government stops playing party politics with the safety of our city, but also the economy of our city. I'm keen to build bridges with the government. It's really important the government and myself work close together. We can't have a national recovery without a London recovery, but London needs the government working with us. The government needs London working with them, and it's really important we work close together.
And what are you doing to try and improve that relationship, just finally?
I've reached out to the government. I'm hopeful we're going to see a better future than we've had in relation to past relationships, and it's really important we work close together.
OK, Mayor Khan, thanks very much. Mayor Sadiq Khan, the Mayor of London, joining us here on the increasingly busy and slightly noisy streets of Soho, Chinatown here in London. Fran.
Anna, thank you so much. I love the fact that the mayor has already had 2 indoor breakfasts, and it's not even 10:30 a.m. in London. Anna Edwards there with our London Mayor, Sadiq Khan. Now, coming up, Jim Mellon, Brunbay Group Chairman, will look at, of course, some of the trends with cellular agriculture. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Discord CEO Jason Citron. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, and Kailey Leinz in New York. Now, it's been a mixed session for global equities and futures. Investors, of course, weighing risks to the outlook, including inflation and a spike in COVID-19 cases in some parts of the world. Now, joining us to talk about cellular agriculture and all of this is Jim Mellon, Chairman at Brunbay Group and co-author of Juvenescence. Jim, thank you so much for joining us. I mean, the focus today, which is why we wanted to speak to you, was basically in this market, which is difficult to value because of inflation concerns. You're now focused on everything that replaces meat. You're focused on everything that replaces some of the things that we used to eat, like milk from cows and things like that. How much do you actually value this part of the market?
Well, there's very little that's public in this area at the moment. I mean, most people are familiar with Beyond Meat, which is a public company. A lot of people will be familiar with the fact that Oatly, the Swedish oat milk company, is likely to go public soon with a rumored valuation of about $10 billion. And some people will know of Agronomics, the London-listed company in which I'm an investor. But there's very little of ways of participating in this yet. However, that's going to change. And if I may say, Francine, I think in 10 years' time, milk from cows will almost all be replaced by either plant-based milks, which we're all familiar with, or by precision fermented milks, which are exact replicas of cow's milk without the cows being involved. I think we'll see half the meat market being either produced in labs or in factories or plant-based. And in terms of fish, the figure could be even higher because fish produced in labs is likely to be on the US market by the end of this year. So we're at the beginning of a revolution, but it's going to be a very fast revolution.
So, Jim, first of all, the revolution is because we're better informed. Is it, ESGs also, and people want to eat, I imagine, healthier. But what do you do with fish, for example? So do you replicate fish like we're replicating meat, or is it about fishing differently?
Great question. I mean, basically, in terms of fish, I mean, anyone who's seen Seaspiracy, which is a shocking Netflix documentary, will know just how badly we're overfishing the oceans and how badly we're treating bycatch, things like dolphins or sharks, and how unsustainable current methods of fishing are. Now, it's possible at the moment to produce fish in labs that doesn't have any of the waste, like the head or the scales or the eyes or the tail of conventionally fished fish. It doesn't have any antibiotics and hormones like so much fish does, and it doesn't have the mercury and toxins and microplastics that so much fish has. and it doesn't cause the overfishing and despoilation of the oceans. And so that's about twice the price of regular fish at the moment, but the price is going to come down and down until it's lower than the price of conventional fish, and it's so much better for human health and so much better for the environment. So in terms of the overall ESG picture, Francine, it's quite clear. About a fifth of global emissions come from intensively farmed animals and the practices around it. You have huge antibiotic use in farmed animals. About 80% of antibiotics go into farmed animals. And that causes a pandemic risk for us all, because we had a bacterial infection that we didn't have antibiotics for. God help us.
Yeah, it is a fascinating space for sure. And Seaspiracy is a pretty amazing documentary. I spent a lot of time in Mosul in Indonesia as well. So I'm hopeful that we have more opportunities like this to invest in. And Jim, you say right now it's difficult to invest in this sector. It's like space in a way, right? Where we know it's going to blow up in terms of revenue generation, but it's hard to get into. What should investors do here?
Well, I think they should watch for some of the exciting companies in this space. And I would think, the SPAC boom is over in the United States. We all know that. So there are lots of SPACs, I think about 400 of them, hanging around waiting to find a company that's interesting. And I would think some of the big US cell ag companies like Eat Just, or what was called Memphis Meats is now called Upside Meats, or Blue Nalu, which is our favorite in the fishing area, could be SPAC potentials in the next year or so. And investors should watch out for that. So there will be more and more companies, as in any emerging sector. But I just want to say that this is not just about food. It's also about materials. Leather is already being produced in labs by Vitro Labs out of the US. You've got cotton being produced by Geltor. You've got collagen being produced in labs, threads being produced in labs. It's a huge market, 5 trillion addressable market, bigger than electric vehicles.
I mean, you're on the cutting edge of this, Jim, and in a sense, there's a parallel to cryptocurrencies. When I started, investigating Bitcoin about 10 years ago, I spent some time with your distant cousin, Matthew Mellon, who also was really on the cutting edge here. What's your take on the cryptos world?
Well, what I don't understand, I don't comment on. I have a friend who's invested in crypto in part on my behalf, and he's done absolutely brilliantly. I would say that it is amazing that one tweet from Elon Musk yesterday could push the price of Bitcoin, which is a $1 trillion+ thing, down by 20-odd%. So it's a wild west. I listened to a very good podcast the other day about Dogecoin, and wow, what a story that is. Unbelievable.
It is, and that brings me to, Jim, you were talking about the SPAC boom being over in the U.S. Cryptocurrencies obviously have hit a little bit of a speed bump here. Are you worried about speculation over speculation in any other areas of the market?
Yes, I am. I think that the market and the NASDAQ market is probably breaking down. I think it has at least 20% risk in it. I think that, there is a big tussle between the inflationists and the or deflationists at the moment. I think the inflationists are going to win. So my money is in commodities. I think that the rotation into value stocks has further to go, and particularly into British big value stocks, which remain very cheap internationally. But I think the NASDAQ looks poised for a serious correction, and it's overdue because prices are far too high, as we all know. And there's been far too much speculation based on quite a lot of funny money around there.
All right, Jim, thanks so much. Never dull. Jim Mellon, chairman of Bombay Group, and we hope to speak to you very soon again. Now, coming up, the Bloomberg Business Week over the course of 5 days. This first of its kind event will bring the magazine to life by exploring the how-to of technology culture and creativity. Today's highlights include Jay Leno and the United Airlines chief executive. I'm looking forward to those. It all starts at 10 a.m. in New York, 3 p.m. in London, and this is Bloomberg.
In most other parts of the world, factory visits like this are routine. Not here. We're in Xinjiang, a region of China where the government has been accused of numerous human rights abuses against the Muslim Uyghur population, including forced labour in its crucial solar industry. China denies the claims. Now, one of the country's biggest solar companies, Daqo New Energy, is betting on greater transparency to neuter the criticism. Daqo itself has not been directly linked to Xinjiang's labour transfer programme.
This is the first solar factory in Xinjiang to open its doors to foreign media since the allegations of forced labour in the sector surfaced. And behind me, you can see the polysilicon, the material that will ultimately end up in solar panels all over the world.
Business has never been better at Daqo New Energy. Demand for the US-listed company's polysilicon products is so strong that its factories are running at full capacity and profit margins are above 50%. But the stock price has lagged. With its massive plant in a region now synonymous with abuse allegations, the company risks being tainted by association. That's left it in the geopolitical hot seat and its CFO trying to reassure anxious investors.
Most of the impact is to investor perception, which has an impact on our share price. It's discounted because of this.
Daqo is lining up auditors to vet its operations. Executives hope an independent assessment will help insulate the firm from US sanctions on the Xinjiang solar industry, an outcome they now see as likely.
We have not ever participated in any of the labor transfer programs.
Would you ever, if the government was to ask you and was to lean on you and say, you need to be part of this program?
We're a foreign invested enterprise, so we're not obligated as a company to follow any of the company government orders unless we want to. And also, I would say morally and principally, we're a company that we have very high integrity standards. And so we would actually, if the government did ask us, we would not participate in these type of programs.
Selecting auditors is just a first step. Getting them into China and securing access to key facilities could be challenging, given the closed nature of this highly surveyed region. What's clear, though, is this issue isn't going away anytime soon. In Xinjiang, Tom Mackenzie, Bloomberg News.
Well, Bloomberg's China correspondent there, Tom Mackenzie, reporting from one of Xinjiang's biggest factories. And of course, a lot of companies can now no longer remain silent on some of the things happening in China. Now, here's a look at what else we're watching today. Kailey, I know you're looking at the reopening of the JP Morgan offices in Manhattan.
I am. I'm about to leave right after the show, Francine, and head down to the headquarters here in Manhattan. Today is the day the bank is opening all of its U.S. offices to employees. I'll be checking out the scene, seeing how busy it is. Of course, it won't be as busy as it once was because there is a 50% capacity limit. But this is really the first major bank, of course, the largest in the U.S., to mandate a return to the office for employees. They expect that to be fully completed by early July, Matt.
Well, I'm sure that'll be fun. You get to be outside, which is nice. Get some street meat maybe and some sodas. I may be a little woozy tomorrow, Francine, because you know what I'm doing before the show?
No.
Little vaccine appointment.
Yay, that's exciting.
Thank you. I'm looking forward to it.
Given there was a picture of Jack Daniels, I wasn't sure where the conversation was going. You never know on the Bloomberg Surveillance Early Edition. We'll also look at, of course, everything else that's going on in the markets. This is Bloomberg.